Welcome to another week in review. We're going to be looking at the trading week of June 23rd, 2025. This is the second time I'm recording this. I recorded this earlier today, and we just got news about 10 minutes ago that the United States did carry out attacks in Iran, which has not really changed my perspective of what this market will do or could potentially do, but kind of brings into context more potential scenarios that we can talk about. So I figured it would make more sense to go back through this and put out a better version rather than coming back to this later and just kind of explaining, if thens, because it seems obviously we know the result now of what just happened. So we'll burn through some data quickly here. There's not too much this week. So Monday, 9:45, manufacturing services PMI, 10 a.m. Existing home sales. We have 1 to 3 p.m. We have some Fed speakers on Monday. Tuesday, we have Powell's testimony in front of Congress at 10 a.m., as well as consumer confidence. That's all that really matters on Tuesday. Wednesday, we have Powell's continued testimony in front of the Senate, I think. I might have those flipped, but it doesn't really matter. So 10 a.m. again, Powell testimony there. Thursday, 8:30 GDP final print, and then jobless claims as usual. 10 a.m. pending home sales. Then Friday we have the PCE print, personal income, personal spending, and 10 a.m. consumer sentiment and inflation expectations. So not too bad. Earnings, we do have earnings starting this week. We have some, so we have FedEx after the close on Tuesday. We have Micron after the close on Wednesday, and then we have Nike after the close on Thursday. So I would keep in mind that we have those coming up as well. Not that they're going to have massive market moving impacts, but things to consider as we get into the earnings season that we're doing right now. So to quickly go through last week. So last week obviously was quarterly OPEX. So we have that out of the way. The the U contract, September contract, weekly high, which is right here. It was set on Monday. Was up into 6100s, which I was actually looking for that to print the week prior, or at least have the next week or two have that tested. And the reason for that is the 6100 level is the B period single prints from February 23rd that we talked about in the last video. That started the breakdown, the multi-thousand point sell into the lows with all the tariff news and whatnot. So that's where the breakdown started. That's where the acceleration of the breakdown started. Responsive selling was generally expected there, unless, obviously we had headlines that, completely negated what happened a few months prior, and we had a decent amount of accumulation into the lows that got us through it, which we haven't done as of yet. The daily and the weekly and the monthly time frames are a little conflicting right now. So the weekly is still one time framing up, the monthly is one time framing up, the daily is one time framing down. So we've had 7 straight days of lower value basically. So even if we're just looking at the U contract, September contract, we'll just look at Monday. So we have Monday to Friday, we have value framing lower every single day. So this is actually the M contract profile right here. So you can ignore this. This is value for the U contract. So we have 5 consecutive days of value framing lower. We have one time framing down, taking out the lows. Friday as well, which is why initially when I did the first version of this video, Friday as well also was a little bit telling in the sense of it's not technically a poor high, but we have a high up here from the prior day on Wednesday before the holiday. That's very flat, I'll say, to keep it simple. There's not a lot of taper on this high from an order flow standpoint. It's not really the best high. It's exhaustive. You generally want to see, a lot of taper, a lot of excess, and a decent high that sticks, which is what we saw on Friday. So Friday we had a pretty stark rejection of the prior 5-day balance on the M period contract, on the M contract prior, as well as the September U contract weekly open. We had a very stark rejection all week, basically, but we had a very stark rejection of that on Friday, leaving excess down in A period, as well as B period singles that started the trend down, which never backfilled. So Friday to me looked weak. Everything I saw on Friday was indicative of a market that was struggling to trade higher. So we had exhaustive highs the previous days. We had value framing lower. The daily time frame is framing lower. And on Friday, the attempt to get up into those exhaustive highs was met with responsive aggressive selling. And that left excess, that left open B period singles, and then we consolidated pretty much the remainder of the day, framing value obviously lower. This is the holiday session, ETH session, so I'm talking about the regular trading days, which would be these. So going into Globex, going into Monday, the likelihood, given the news that we just had, I think will be a gap down. That's my assumption. I mean, I think you'd be hard pressed to have, an immediate gap higher on news like that. Maybe we do, but I'm going to assume that we're probably going to see immediate weakness in this market from that news. And if that creates, a liquidation and a viable low at some point, then that's entirely possible. But the big thing is, if we take the news out of the equation, what I'm looking for essentially is two things. So the primary area from Friday to pay attention to, and this will be important going forward as well, would be 6,040 to 6,047. So we have last week's POC up into the top of the B period single prints that we have, which was continuation selling that took us down into the lows. So if we see any type of drive up into this 40 to 47 area that fails, so if we see a lot of volume, a lot of push, a lot of buying that goes absolutely nowhere, then we see that reverse, with a stark reversal, especially on the order flow side. If we see that start to happen and we see no ability to build time and volume up here, so essentially exactly like this thin profile, we have, stark rejections, wicks that come in, however you want to look at it if you're just looking at candles, and then we start to offer back below 40s, then I think the move, at least in my opinion, would be to stay on the short side. That's how I'll play this. I'll stay on the short side. I'll look for the continuation moves lower down into last week's value area low into 615s, and more likely down into the weekly low on the regular trading hours of 6,003s. We have this open gap from Globex, this open gap at 59.90s. I think realistically, the way that I'm looking at this is that this market is looking for, a broader correction below 6,012s. So below the prior weekly open, below last week's value area low, and generally that would also be below, would be taking us below the regular trading hours weekly low down here too. So assumption is that we gap lower. I wouldn't be surprised to gap below 59.90s. I wouldn't be surprised to gap down into the bottom of this distribution right here into 59.80s, potentially lower, potentially 59.60s. I really don't know. I really don't know what to expect. But if we're looking at this, from that perspective of, Friday showed us some weakness for sure. The last few days have actually shown us weakness, in my opinion, but Friday showed us kind of played the hands, or showed us the hand that this market was potentially looking for, some type of correction, potentially anticipating news to come out this weekend. If we look for, if we do see a gap lower, then I think the areas I'd be interested in again would be if we do see a shallow gap lower and a immediate buy. I'll look to see if we have some sort of reaction up into 6,040s to 6,047s for continuation sells lower. And then if we're gapping below last week's RTH lows, we're gapping below even the ETH low, then I'll look to see if there's any snapback to get us back up potentially into this 6,000 to 59.90 area. Where I would assume continued weakness for a correction happens is if we gap lower and we can't get back above 59.90s. So I think that is going to be this range down here, assuming a gap, is going to be critical. So this prior weekly balance on the M contract, this prior 3-week balance on the M contract, again, has been pivotal on this market, at least in my opinion, for months at this point. And if we're gapping below this and we start to offer, this 59.90 to 6K range to, 6,003s, if we start offering this, then again, I think the move is going to be, in the short term, at least sell some rips and look for a correctionary move down. And where I'm looking, at least in the short term, would likely be filling in this 5800s area, filling into 5840s down into the 200-day moving average. And this is where I think ultimately a bigger decision will potentially be made. So That's how I'm going to look at it, on the assumption that we gap. And again, if we don't gap, if we open flat, which I think is unlikely, but if we open inside this range, then again, the other spot I'll be watching is 6,040s to 47s, and how we respond up into this range right here. And again, if we see clear rejections of this area, then I think it's just continue on the short side, and let's see if we can get some continuation down to finally clean up some of the structure that we've been building above for quite a while. So the flip side is the bullish side. And I think there's two possibilities here, and the long trades that I'd be interested in, it's going to be very much dependent on how this market opens, how this market trades in the first couple of days of this week, because there's going to be more that comes out this weekend. There's going to be more information that comes out. I'm sure there's going to be some sort of response from Iran. We don't know, and I don't know. I don't want to even try and speculate it. I think the interest from me from a potential longs trade would be down into this 5840s area. That'd be the first place. If we do see some pressure down, this would be the first place, generally speaking, I'm going to be looking to see if there's interest and responsive buying. The next place would be down into 5780s. So this is going to be the 100-day moving average, and this would be the bottom of the 3-week balance that we broke out of, or tried to break out of. So we have 59.90s, this prior balance range high up here, and then typically, if we're failing underneath balance, we'd be targeting potential move, the full traverse, potential move to the other side of balance, which would look down into 57.80s. And this is potentially a swing short target and potentially a long target, a long trade entry down here into 57.80s if things go really south with the market. And again, I don't know if it will. This is just purely areas to look at, and areas I'm gonna look to see for interest. So if the market says, you know what, great, it finally happened, and we open unchanged, I think if we're building time and acceptance back above 6,040 to 47, I think the move is taking out these highs finally on the daily. And I think if we're accepting and closing dailies above 6,040s, whether it's now or whether it's in a few weeks' time after we have some sort of correctionary period, I think that opens the door to all-time highs pretty quickly. So I don't know how likely that it is, but we'll have to see. Obviously, play this day by day. The NASDAQ, I won't spend too much time on this because it's basically the exact same. My focus is really going to be the S&P. I think it's going to offer, at least in my opinion, I think it's going to offer the easier book to read from a flow perspective. Generally ES from an intraday perspective for me in the last few weeks has been a little bit clearer, a lot less slippage as well. So same general idea. I think this market continues to be weak if we're below 21,965s, and again, if we're assuming we gap down. If we gap below last week's regular trading lows, then I think what I'll be looking for potentially is if we have any snapback and we have any interest in getting back above this 750, so the 720 to 730 area, or pardon me, 720 to 750 area. If we have any interest in bidding back above this, or if this starts to offer to have continuation trades down, and I'll be looking as low as this 21,250 area in the short term at least. And again, if things get really, really nasty, this could obviously go lower. So the flip side again is we could potentially put in a low, a decent low, anywhere in this range, in this 21,250 range. That could be buyable. We'll have to play that day by day. And then the other side of that is obviously acceptance above the A period, or pardon me, the B period single prints, acceptance back above this 21,970 range. I think this does take us to all-time highs. But again, I don't know if that's going to be anytime soon, with the information that just came out this weekend, and whether or not we see some moves down before we see any real continuation up. So this could potentially be from a trading perspective, this could potentially be either a very hard week or a relatively easy week. And when I say that, I mean this market has been bracketed. It's been challenging, but it's also been very prone to mean reversion, which is inherent in a bracketed market. So if we see these levels that we have, built out in this range, in this bracket, continue to be respected, and we can make, assumptions based around, the responses from those levels, then it could potentially be relatively straightforward in the sense of, we can see where weakness folds in. We can see where weakness comes in, hence like if we gap below and we can't get back above 59.90s, we can generally assume that this market probably in the short term is going to be seeking value lower. It's going to be seeking, it's going to be seeking interest lower. And if we stay on that short side into some of these bigger areas, into some of these critical areas as well, and some of the poorer structure that we have below, we can start making decisions lower to see, to see if we see some larger players start to re-enter into the fold lower, or if there's no interest in, no interest there, do we have potentially a larger correctionary period down at 57.80s? And obviously the flip side is, do bigger players, were bigger players just waiting for this inevitably to happen, and then do we end up, accepting back above 6,040 to 47, negating what happened on Friday, and then taking us back up into last week's high and continuing on. So we'll have to see. I hope this helps. This is a challenging video to make, obviously, with what just happened, and obviously we have a pretty large gap risk. So we'll have to see. I hope things don't get crazy. For the sake of everybody, I hope that everybody has a relatively peaceful week from a trading perspective, and things just don't get too crazy. So this video helps in any way. Please like the video, please comment if you have any questions, and subscribe to the channel if you haven't. Appreciate your time. Thank you.